Coming up, Powell stagflation warns. Peter, your stomach growling was pretty funny there. Coming up, Powell stagflation warning sends shockwaves through the markets. The Trump token unlock, will it sink or swim? And gold surges to new highs as the dollar tumbles. All this and more on today's After Hours.
You can leave my stomach out of this, okay? My goodness.
You're tuned into After Hours for April 18th, 2025 edition, where headlines meet price action and every story has a ticker. I'm one of your hosts, Tom Hartman, alongside Peter, the Robin to my Batman, Hartman, to extract the signal from the noise. After Hours is brought to you by Traders Post, the greatest automated trading platform known to man. And if anyone disagrees with me, you can come catch me outside. But more on that later. For now, before we turn our sights to all things markets, Peter, how's it going? How's your week been?
Well, I started taking creatine.
You're hungry. You're hungry.
Creatine,
No,
and
hold on.
apparently, no, I'm not hungry. But I had a full
Then
meal.
you have
But
structural damage in your home. The growling was pretty intense.
look, I'm trying to be healthy. I'm trying to do all kinds of. I started eating sauerkraut, taking creatine, cutting out seed oils. There are some biological consequences to that. Enough said.
Well, I know you don't watch markets as closely as I do because I'm obsessed with them. But how are you feeling about the markets lately? I'm just curious about, like, for the everyman, how the Trump tariffs have been weighing on you, sitting on you.
Look, honestly, if I wasn't watching politics in the news, I wouldn't know anything was happening.
Really?
Yeah, I don't know. I mean, I heard today yesterday something about Trump might fire Jerome Powell, and people were like, "Oh my God, it's crisis, constitutional crisis." Okay. Aside from that,
Who's your favorite chairman for the Federal Reserve? Mine's Ben Bernanke. All right. Well, that makes sense.
well, how
All
are
right,
you
so,
feeling about the markets? How are the tariffs affecting you?
well, I'm sort of excited by them. My entire life, as someone who's like a Canadian who supported Ron Paul, just to let you know where I'm starting from, all I ever wanted was for the monopoly table just to be flipped and for us to just like figure it out afterwards. Here it's not flipped. What it is that someone just like hit into the table real hard. And we're all trying to remember, okay, where are the pieces and what's going on? And should we just start over and all that sort of thing? It's sort of like that's how it feels. And I like that. It's sort of like, hey, this whole Triffin's dilemma, what's going on with the US dollar? Does America want to be an empire or not? Can we have a conversation about that? And for the first time in my lifetime, it seems to be actually be happening. So I'm sort of excited by that, and terrified, right? Because who knows what's going to happen? Is Alberta going to be the 51st state in the United States? Then I'm like, am I moved to Alberta then? Like, do I front run to move to Alberta? Because I'm not sure I want to be a part of in a Canadian province as Canada starts getting hollowed out as people start moving down south. It's a whole thing. It's a whole thing. So the tariffs to me is like a first blow for, like, in the history books. It'll be like, and it started with the tariffs. And look what
Okay,
happens after that.
sure.
Well, speaking of the tariffs, it's sort of hard now to talk about any stories that doesn't have tariffs at the top of the list. But here we're going to vacillate to Powell, because Powell, the high priest of the holy global empire, has spoken this week. He spoke this week, and whenever he speaks, the weather changes. So on April 16th, 2025, Federal Reserve Chair Jerome Powell dropped a bombshell during a speech at the Economic Club of Chicago. He didn't just hint, he outright warned that President Trump's tariffs could drag the US economy into stagflation. Rising inflation paired with sluggish growth. For traders, that's the kind of word that sends chills down the spine. It's a portfolio wrecking scenario where prices climb and the economy stalls. The markets didn't wait to react. The S&P 500 tanked 2% that day. The VIX spiked a little bit and erupted with traders scrambling to make sense of it all. This isn't just another Fed speech, it's potentially a game changer for how markets and monetary policy plays out in 2025. Before we start on this, Peter, I just want to, I'll have you play the video in a second. with Powell at the Economic Club of Chicago, but stagflation is basically on the table now. No one's saying stagflation other than the Ken Carsons and the Peter Schiffs of the world. No one's saying stagflation, but this is what a Powell is actually talking about. Let's go ahead and take a look at what he has to say.
Wait, just before you do that, what is
Yeah.
stagflation?
Stagflation, well, that's what he's about to explain, is when you have high inflation and falling growth.
All right.
Well, just to point out here, if you're not familiar with the whole grid system or quad system or whatever it is, of how growth and inflation affects policy, right? In grid one, you have high growth, so growth is increasing, GDP is increasing, productivity is increasing, but inflation is falling or steady. That's a nice, comfortable area you can be in economically. The second step is when you have enough growth, enough productivity, eventually more money gets created within the system and more money flows in. And since more money flows in, inflation goes up. Now you have growth up, inflation up. That's the roaring 20s, baby. That's a dot-com bubble. That's height into the global financial crisis. That's pre-COVID. That's like rock and rolling. Then you have stagflation when the growth tips down, because now there's no more, the money's not actually fueling any more growth. There's not enough productivity. There's not enough company creations and all that sort of thing. Too much risk has been taken, that sort of thing. And inflation goes up and growth goes down. That's stagflation. And then deflation is growth down, inflation down. And when you have those two, well, winter is coming. Winter is here, right? And then you clear out all the risk, all the leverage that can be cleared out. Things get bottomed out. That's where Warren Buffett buys in with the hundreds of billions of dollars of cash, and we start the whole cycle all over again. But the reason why it's important here is that the Fed doesn't normally admit this, right? The Fed goes, nothing's wrong, nothing's wrong, nothing's wrong, we fixed it. That's how they do it.
And why aren't they doing that now? And don't tell me it's because it's politics, because the Fed is not political.
Not quite. Well, let's hear what Powell has to say as the host here at the Economic Club of Chicago tries to pry some of the news out of him. First, he gives us a little speech at the beginning. Let's just take a look at a quick minute from that.
As we learn more, we will continue to update our assessment. The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Both survey and market-based measures of near-term inflation expectations have moved up significantly, with survey participants pointing to tariffs.
Okay, so that's Fed speak for slow growth, high inflation, and we're not saying that, reading rainbow style. Don't take our word for it. These other people are saying that that's the case. I don't know why they do that. The Fed has 2,000 PhDs? Why do they always quote other experts? You're the experts. You hired all the experts. All the experts are with you. Quote Jim, who works down the hall. What's going on over here? I never understand that. Experts say, analysts say, sentiment shows. So he's talking about stagflation over there. But let's jump, because in these prepared marks, you always get it's a committee of people who choose every specific word inside of the speech that the high priest provides for the monetary system. But then you want to get to how he actually answers questions off the cuff, because that's where you get a little bit of truth in there, right?
Totally.
Let's talk a little more about tariffs. I mean, you recognize that some of the effects of the tariffs will be one-off, transitory, but you also have said that...
Transitory, just to remember. That's the favorite word right now for the last 10 years. Remember, transitory for inflation in 2021, 2022, 2023. Inflation is going to be transitory, then it turned out it's not. So transitory word now means sort of like, okay, it's not really transitory. So he's like, well, the tariff price increase is supposed to be transitory, but what if it isn't?
Well, it's as transitory as my girlfriend. It's been 20 years.
20 years. Exactly.
Perhaps they will give room for a number of firms to raise prices. You mentioned dryers. When washing machine prices went up because of tariffs, dryer prices also went up in tandem, even though they weren't tariffed. What's your sense about the effects of tariffs on inflation? What would make them more persistent, and what would make them have effects on growth?
So in a kind of a simple starting point is one tariff comes in that gets passed along in prices and raises inflation, but it's just a one-time thing. So the price level goes up, and that's it. But that can happen in some circumstances. But
And this is what they were saying the tariffs would be like. It's gonna be a runtime increase in prices. It's not gonna be inflationary. So he's saying that as like that's one scenario. Well, let's go to scenario B.
it depends on a number of things which we don't know yet, and I would point to a couple of them, or three of them actually. One is just the size of the effects, and as I mentioned, the tariffs are larger than forecasters had expected, certainly larger than we expected, even in our upside case. We looked at a range of cases, so that's one. The second one is how long does it take for the tariffs to have their effects on inflation? To the extent it takes longer and longer, that raises the risks that the public will begin to experience higher inflation. They'll come to expect it, and companies will come to expect it. So that risks higher inflation. And the third is just what I mentioned in my speech, which is my remarks, which is got to keep inflation expectations well anchored. So if we have those three things under control, that's what it will take. And indeed, our role is to make sure that this will be a one-time increase in prices and not something that turns into an ongoing inflation process. That's a big part of our job.
What about the
Okay, so actually, let me just finish this part over here. Well, I just want to mention over here the three things that you just talked about are all the same thing, right? So we talked about like the uncertainty around the implementation and size of the tariffs, which can cause people to be unsure about what to expect for the future. Then he talked about how long it takes for the tariffs to flow through the economy, which makes it so that people are unsure of what to expect in the future. And then he says the third point that we look at is if inflation expectations are unanchored, which is how people feel about inflation in the future. All of what the Fed does, the whole Fed game is expectation. All right, that's what they're working on. As long as they can convince the majority of people of the herd to go left, the herd goes left. And if they start going right, then they go, well, then the herd's going to scatter. That's all the Fed is doing herd and cattle. All right, let's just finish with the stagflation here.
The effects of tariffs on quantities, with the level of tariffs that, for example, have been currently applied on China, there's a fear that the supply chain may get disrupted, that firms may not be able to import their relevant stuff from China given the level of prices. If it turns into a supply shock, would the Fed's response be different than if it was primarily something which affected just prices?
So this question is on the heels of, if you guys will all remember, the inflation that we got in the early 2020s was because of a supply shock. This is why the Fed was saying that the inflation was transitory, because things are shifting around. Well, it turned out that because that was persistent, it actually flowed through the economy, and the length of time it took to flow through and the unanchored expectation actually helped to cause inflation within the regular population. And so he's saying here very cleverly, he said before, transitory, just a hint, like we know the term, and here, supply shock, like what if the tariffs cause a supply shock thing as we're reshoring manufacturing and production and all that sort of thing? Wouldn't that seep into inflation expectations into the future? In a very calm way.
So I actually had dinner at the Chicago Fed last night, and with a number of directors of various parts of the Chicago Fed, and many of them are CEOs of significant companies, and they this uncertainty that they're feeling and the issue with imported components to their products is just a huge issue. But with if you look back at the pandemic, if you remember, there was a shortage of semiconductors, and that led to a shortage of cars at a time of extremely high car demand. And it was a prolonged shortage because production couldn't keep up. And that led to an extended period, one of the things that led to an extended period of inflation. So when you think about supply disruptions, that is the kind of thing that can take time to resolve, and that can lead what would have been a one-time inflation shock to be extended, perhaps more persistent, and we would worry about that. In this case, you can look at the car companies, which their supply chains are likely seem to be on track to be disrupted significantly, and you would worry that that process will take some years and that the inflationary process might be extended. So these are all of this is highly uncertain. We're thinking now, really before the tariffs have their effects, as how they might affect the economy, and that's why we're waiting really to see what the policies ultimately are, and then we can make a better assessment of what the economic effects will be.
Okay, Peter. So if I were to ask you, that's it for the video there. If I were to ask you, what then do you think Powell and the Fed actually thinks going to happen with tariffs? Like, from what he was talking about, like, what would you say? What would you say he just transmitted as what he thinks going to happen?
I think they have no freaking idea.
Oh no, I think they do have an idea. I think what he's doing is setting the groundwork to be it's Trump's fault.
Well, okay, yeah, yes, but do you think he thinks tariffs are going to increase inflation?
Have you ever seen Powell at a presser where he's asked a question, a hypothetical question? Do you know what he says to hypothetical questions? He doesn't answer hypothetical questions. Why doesn't the Fed answer hypothetical questions? Hey, what would you do here? What would you do here? What would you do? We're data dependent. We're going to see, and we're going to make decisions at the time. We haven't made any decisions yet. Here, he laid out an entire hypothetical situation that we don't know yet. And they never do that unless that's the situation that we're dealing with. Right? But then he hedges it with, well, we don't know, in order to sort of like soften. But like on Twitter, Zero Hedge tweeted out during this talk, watch live, stocks puke as Fed Chair Powell raises specter of stagflation, awaiting greater clarity. Real Tuck Frumper on X's, Powell warns of stagflation risks, higher prices from Trump tariffs, and Jack J. Kelly says Powell's basically saying tariffs equal higher prices plus no growth, stagflation vibes, buckle up. All right? So the market knows, the market participants know, we know what this means. The Fed does not start talking, I wonder what will happen during stagflation. Oh, one of the worst things that could possibly happen?
What is the Fed's response to stagflation?
That's right. So in deflation, the Fed prints, right? Just print in order to get out. That's the whole idea, to soften the blow and bring it up. But if you print during stagflation, any inflationary period, you get stagflation, because the higher prices, the higher cost of things, and the higher uncertainty makes it so that if you're going to start a business, it's very difficult. So you're more likely not to do it. And if you already have a business and you're eating into your profits, let's say you have a narrow margin, and now the inflation is making it so that you have a negative margin, well, you close your business. Right? You're not going to necessarily, and then you're not going to operate for the next 5-10 years hoping that things are going to get better. You'd be like, well, I'm sorry, everyone, I'm going to have to close up shop, or I'm going to have to downsize dramatically. Growth decreases. Innovation, money that's spent on R&D, surplus that you get for research, for more productivity, or for new types of designs or whatever it is, you're going to pull back on that because you're going to have a war chest. Winter's coming, and it's a low growth period. You're not going to waste your money on that. And so these are all headwinds to the economy. And so the Fed has two mandates, right? They have unemployment, low unemployment that they're aiming for, and stable prices. Well, inflation cuts stable prices out of the window, right? The guy answered the question at the beginning. He said, "What prices went up on dryers, and then they also went up on washers at the same time, even though washers weren't affected, right?" So the inflationary thing happens all over the different place. If you could have rising prices, you could have rising prices everywhere. Boom, half of the Fed mandate failed. The other half is unemployment. Well, like I just said, if you have businesses who are laying off and new businesses who don't start, well, unemployment goes up. And then the only tool that the Fed has in order to do anything, really, the tool that they would say they would have is interest rates. And if they cut interest rates to increase the money supply, it causes more inflation.
Yeah, but we don't really care about inflation. We want to increase the money supply.
But if
That's
they increase
both.
the money of supply and then inflation goes up, then more growth goes down. And the more growth goes down, the more unemployment goes up. So
So
the
you're
cutting
telling me
of the interest rates can actually cause the further stagflation.
so what if they increase interest rates?
Right. So they would have to increase interest rates, which does what to growth?
This is a catch-22.
Exactly. So the Fed can handle high growth, high inflation, and the Fed can handle no growth, no inflation. But it can't do anything during stagflation. You have to wait till the effects flow through the entire economy. You sort of digest it, and it's sort of like a lost generation.
I don't like what I'm hearing at all. Not at all. Get Powell out of there. Get him out.
Listen,
Get him out. Okay. You say the Fed is in the expectation game, that they don't really do anything, that it's all it's a theater for the purpose of manipulating the sheep.
well, they do a bunch of things, but the most important thing they do is expectation.
Right. So isn't him talking up this stagflation outcome going to make it more likely that stagflation will occur? It's kind of
Well,
like the law of attraction. You know what I mean? If you think it, if you can see it,
that which is like it onto itself is drawn. No, it's more about if they're saying that, it means that it's to the point where they go, well, if we don't say anything, it can never actually change. Like they probably work behind the scenes to try to be like, because it's two things they're saying here. If you're gonna don't do tariffs at all, or if you're gonna do the tariffs, do them for sure. Right?
right?
He's not saying don't do tariffs. He's saying make sure the uncertainty is not there. Don't put them on and not on and on and not on and 100% over there, 10% over there. Because that's what people don't know, and you can't make decisions that way. So he's basically begging. He's basically on his knees begging King Trump, please put on your tariffs, do whatever you want, but do it now, do it big, or go home. So the fact that they're saying that at an economic forum, that he's saying it at all, but in an economic forum, is basically the Fed screaming, get these tariffs, just get them done. It's like Pippin who says in Lord of the Rings, I don't mind it's not being in a war that's a problem, or that I don't like, but being on the edge of one I can't avoid, that's really a disaster.
Yeah.
Pippin is like the coolest hobbit.
I think every time I hear about that line, I think, after the war is done, I'm pretty sure you preferred being on the edge than actually in it. I don't think anybody in D-Day was like, oh, glad we got that over with. But yeah, I understand what you mean. I don't like what you're saying. Like and subscribe. Is that a bad time? Is that a bad time?
We'll see what happens. So all eyes on the Fed, what they're going to do, but them cutting rates, not a good idea. I don't see how they can cut rates. In fact, I think the probability for a rate cut this year has dropped dramatically. Because what are you going to do? How are you going to cut rates? Because then, if inflation does pick up because of all this, then they'll blame the Fed. So the Fed basically has to stay paused or increase rates.
And what is the 10-year doing? Does that affect this at all?
We're at 4.3, down from 4.55% to 3. It was at 3.9 at the heart of when the tariffs are all announced. So it's all over the place. But 4.33 is high for the 10-year. Like considering the last 15 years of zero interest rates, or whatever, not 15, like up to 2020 of zero interest rates. 4.3 is pretty high. And then you have this whole refinancing cycle that's going to start, right? So you can imagine a bunch of people refinance in 2020, 2021. Let's say they refinance a debt 5 years out where we're coming due. So now they're going to have to refinance 0% interest rates at 4%. That's going to be tough.
Great time to buy a house.
So earnings season this year, we'll see what the guidance is like. But look, a lot of uncertainty things up there. It's pretty cool, pretty interesting. May you live in interesting times. Also interesting, a little tiny story here, which is the Trump token unlock. Did you know about this, Peter? Do you own any Trump token, the meme coin?
No.
All right, so it's unlocking, I think today. 40 million tokens unlocked, which is about $330 million in Trump coin value right now. It's 767. And it's owned mostly by insiders and the team. so CIC Digital, and there's no clear sign of any selling yet, despite fears that the number of holders dropped from 817,000 Trump token holders down to 637,000. And when you compare unlocks of this nature to other cryptocurrencies that also had large unlocks, it don't look good. It don't look good. So if we take a look at the Trump
What,
chart
this is going to
here.
be like a rug pull or what?
Oh, well, it's not a rug pull. It's just there's no
Who's this bad for?
token holders for Trump.
They know what they got into.
No. I went back and looked at the videos and the pumps and the people talking about it. A lot of these people thought he's the president of the United States. It doesn't get more credible than that.
I have more faith in Haktua.
Yeah, exactly. A lot of people got sucked in. Can you imagine the president of the United States did it? Like, you can imagine a bunch of people was like, hey, let me just get some of those Trump tokens. So pull up the chart over here for the Trump coin. It's beautiful. Beautiful. Do I have actually one that's more longer term? No.
Do you own Trump token?
I'm shorting Trump token. I'll tell you that. That's exactly what's happening. So to me, that's the trade, because the selling pressure has just been on since the very beginning. And look, it unlocked today. We didn't get a giant dump here of any tokens, right? This is just a steady sell off. So the question is, if it dumps, I think it could dump. The number of tokens unlocked is 20% of the supply. So let's say we get a 10, 20% sell off, and then the momentum further down. Maybe we wick to 50% down. Maybe we wick to $3.50, which is my short. Right now I'm shorting from $7.50 to $3.50. I'll take it. It's a fun short, because I don't see how this is going to pump. People are trying to spin this as, hey, this could be bullish for Trump tokens. If they don't sell the Trump token, that shows that the insiders are on board still with the Trump token, and then it should go up from over there.
Right. This is time for them to show.
I'm shorting it. That's what's happening. Because when you take a look at some historical ones, like what is it? Apto. Yeah, Aptos. After they're unlocked, the token dropped like 18%. What is it? If you pull up over here in USD. So this is what a unlock looks like. I think March 2025 unlocked, and it just sells off, because people. The unlock means like they bought the tokens at a lower cost, like they made a deal, get at a lower cost, and the idea is that they unlock it so that you don't get the sell off, and then when the unlock occurs, the idea is that the token has gone up so much that you can sell it for 510x, 100x profit, and then it dumps the price, but it doesn't dump the price too much if there's enough momentum on life into it. But with a token like this, it's like if SafeMoon had an unlock. You think SafeMoon's going to start bouncing back up? I don't think so. And so I wouldn't be surprised if the bottom just drops out, because if you're sitting on $100 million worth of tokens for the Trump token, you might just be like, hey, let me just sell this off. It's not going anywhere. It's not going to pump back up.
Yeah, but it hurts your reputation. Your whole thing was that.
No, not for the holders, not for the people who bought it over the counter. There was a video recently, actually I should have put it into the show, but of the shoot for CoffeeZilla. I don't know if you saw it. What was the token name?
The one that crashed 90%?
Yeah, exactly. That was pretty amazing, because it's another one of these pump schemes. All these tokens are like these if it's not pump and dump schemes, they're still schemes where what they're trying to do is inflate the price in order to dump on retail holders. Like, that's what the game is. Shoot, I can't remember what the name of that token is.
It's not in the title of the video, but I'll get it for you.
Yeah.
Give me a second.
That
Interviewing. All right.
What's his name?
Let me pull it up here.
What's interesting is that this guy was very very matter of fact of like, this is how it works. And all the mechanics he was describing for how to support the coin was like, is like, well, this all sounds extremely shady. What do you mean? If you're selling the token at half the price before the market opens to then sell it later on, it's like, well, we're being responsible because we're locking the tokens. There's a vesting period, and then they dump later on. It's like, okay, so you want them to wait until you're able to pump the price up enough so that they make more money? How is this not a scheme? And what is it that you do when you sell the tokens for, at half the cost? What do you do with that money? Oh, we put that back in the community. What does that mean? Well, we buy the token on the open market in order or support the price of the token. Wait, so the price of the token is only supported because of these people who bought the tokens beforehand?
Mm-hmm.
Yeah. Okay. So let me get this straight. The people beforehand, the big money holders, buy the token at a discount. You use that money to go convince regular people to enter the thing in order to raise the price. After the price gets raised, they sell their tokens for a guaranteed profit, essentially a guaranteed profit, and sell into the retail traders. And the only way they don't get completely screwed is if there's enough demand. That doesn't happen. But eventually, all the selling will be done because the only reason anybody is in it is because they want to sell to the next guy. Yeah. And this to you sounds legitimate. This to you sounds like a good way of going about it. This is not some
Tom,
big scheme.
Anything can look and sound bad when you say it that way. Okay. Mantra, is that it?
Mantra. Yeah, I think that's what it was. Take a look at this chart. Oh my God, look at that.
Hang on, let's pull this up. Ooh.
And that's a non-logarithmic chart, right? So if you look at non-logarithmic, like that's basically what happened.
My goodness. I'm waiting for Trump's tweet to be like, now's a great time to buy. Yeah, that's straight down. My goodness.
That's straight down. Exactly. This is the pump scheme. Like they pump it up level by level. They pump it up. Then you get this area where there's just no more volume there. And then they sell into it. Here, it was a thing where this wasn't an unlock. This would look like someone or some people sold a crap ton of it. We don't know the whole story yet, but I wouldn't be surprised if something like this happens to Trump token.
Okay. I mean, how many people does this affect? Are people really caring about the Trump token? I don't get it.
It affects 637,000 token holders plus the entire space.
And are all those people like Trump supporters? Like, I don't get it. What are these? Are
They're
they
all
the
Solana
degens?
supporters. They're on the Solana network. Okay, so as far as I'm concerned, I'm not going to say it, but as far as I'm concerned, I'm a good Christian man, so I don't want to say it out loud. But as far as I'm concerned, they could just take. Let's just leave it at what it is, right? They want the pump.fun. These are the degenerate meme coin gamblers. I can understand that they're going to get burnt.
All right.
I mean, they bought the tokens because they wanted to be insiders, early adopters of dump on other people. So I don't really feel any sympathy for people like that. But let's not dig into that a hole, Peter. I just wanted to get Trump in the algorithm so that the YouTube algorithm and AI knows that we're mentioning King Trump and serves up our videos. Okay.
Okay.
That's the whole point.
All right.
All right, moving on to the last story here. This is by April 18th. By today, gold blasted to $3,327 per ounce, a record-smashing peak that had traders buzzing and portfolios gleaming. This wasn't a quiet climb. It was a full-on sprint ignited by tariff fears, a crumbling U.S. dollar, and a market desperate for something solid to cling to. For anyone watching the charts, this was the moment gold went from being a hedge to a headline, dragging mining stocks along for the wild ride. The surge wasn't just about gold. It was a neon sign flashing economic unease. A weakening dollar fueled the rally with while tariff talk had investors piling into the yellow metal as a shield. Mining stocks like HMU and AU didn't just ride the wave, they amplified it, offering traders a turbocharged way to cash in. For now, gold's the king of the hill, but any shift in trade tensions or a dollar bounce could dim its dazzle. Until then, it's the star every trader is watching. Gold is at 3,000, Peter. And I'm going to give you 19 guesses as to who is thrilled by it.
Oh, my namesake, Peter Schiff.
Peter Schiff. Look, I like to dunk on Peter Schiff, not because I don't think he's right, but because I think obviously broken clocks. When he started talking about the doomsday after the global financial crisis, saying that it's not over, yeah, I believe it. It's not over. Of course, it's not over, but it took almost 20 years for the big hammer to fall. Now, I know what Schiff would say is that the dollar has continued to fall in purchasing power, and that and some people would call the period that we are in right now the silent depression, because if you calculated unemployment rate the way they did before, unemployment rate might actually be around 29%, while in the Great Depression it was 25%. But these are all details, Peter. Stock market up and to the right. Good. Good stuff.
Yeah, but gold it's not a play for making a ton of money. It's a store of value.
Store of value, exactly.
So in terms of store of value, it's doing phenomenal.
Well, I don't know if it's doing phenomenal. It's only at 3,000.
Only,
I was expecting.
Is that 2,000?
Do you know how many people called for gold 5,000 3 years ago? Biggest inflation push we've ever seen. The sky is falling. All the stuff these people have been talking about. If it goes to 5,000, that's my low end of the range is 5,000. You know how many times I heard that? We're at 3,000 and inch.
Okay, yeah, but people say Bitcoin is going to be at $1 million. It's up now. We're happy with where it's at. Doesn't have to be at the expectation level for it to be performing very well. $3,327.01 an ounce. Come on.
There have been one of these days. I think Mike will talk more about these, but he's shown me stocks that have gone up 300, 400, 500% in like 3 months.
How are you supposed to find those?
He finds them. Mike finds these stocks.
Do the research like Mike does.
Well, you ask Peter Schiff, hey buddy, which mining stocks should I buy? What do you think he tells you? You think he tells you the mining stocks he buys? No. So it's the same sort of deal. At least the Bitcoiners tell you what to buy. Buy Bitcoin. But the point of the story here is I think we should give Peter Schiff his due because he was right. Gold is up. So let's see what he has to say.
Oh, wait. You're playing a Peter Schiff? Sorry, go back. I didn't.
Yeah.
I don't hear the sound. Is the sound on?
It is. Oh, let me try it again.
Hey, I'm seeing my face. Why am I seeing my face?
Investment account is in gold and gold miners. That was up from 50%, I guess, before the tariffs?
Right. That's not physical gold. That's just my stock portfolio.
Yeah, miners.
And I had generally tried to keep it around 50% gold stocks, but the markets have moved in the favor of mining stocks recently, and so that's taken me up above 60%. But I'm not paring back any of these positions because I believe we're about to see a spectacular rise in gold stocks. And the reason for that is that when gold hit 2,000 early last year, nobody even believed that it was going to go any higher. And you had a lot of firms downgrading the gold mining stocks because they thought gold had peaked. And the entire time gold rallied from 2,000 to 3,000, investors just expected the metal to fall. And so nobody was buying the miners, and nobody was even buying gold as an investor. It was all foreign central banks.
Let me just jump in because we're cycling through, Peter. We're cycling through the names that you like. We just showed Agnico Eagle. It's up 52% year to date. And it's hitting an all-time high today, I believe. Franco, Nevada, up 43%. I mean, we could look. Actually, I mean, we're seeing these numbers moving. Yeah, about 43%. So gold's certainly a big picture here. Yeah.
AEM, on a price to cash flow basis, it's the cheapest it's ever been. Even though the stock's gone up more than 10x since I first bought it for myself, I think the stock is still cheap. But the point I was just trying to make is that investors are now going to have to come to the conclusion that gold's not going back down to 1,500. It's probably not even going down to 3,000. It'll probably be at 3,500, 4,000 before the end of the year, and it's going much higher than that. So gold stocks have to be repriced. And I think between now and the end of the year, these gold stocks could double or triple. So there's a lot of opportunity for investors to buy these stocks now. In fact, I'm telling my clients to not even buy physical gold. I've been recommending physical gold since before $300 an ounce.
Right,
now
I
it's
remember.
3,230. But I think that the opportunity is so great right now. In fact, I came out with a special report people can get on my website, the best way to buy gold at europac.com, where I'm really making a strong case that you don't even buy any physical gold right now. You got to buy these gold mining stocks before they really take off.
And Peter,
Yeah. So he's been right. Peter Schiff was right. And the gold mining stocks are just like absolutely taken off. Like he's talking about that they could double or triple by the end of the year. Some of them have already done that. One of the things that annoys me is that I used to own all these stocks.
I was just about to say.
Oh yeah, you remember? I used to
Yeah.
own all these gold stocks, and I got so tired of waiting around for the sky to fall that I just sold them all. What's interesting though is that because you buy a gold stock at $5, a junior miner at $5, and then it drops to 250, and you're sitting on a 50% loss for 5 years. You're like annoyed by that, and then you look now, and then gold is up, and the stock is up. Fine, whatever. What I find interesting is that this feels the same way that it felt when Trump did the Bitcoin reserve. It's like it's like, yay, the system's collapsing. Like that's what it is, right? It's like, yay, I can have all uncertainty and fear. Everybody's running for the exit, so no one knows where to put their money. Let's put it in a goal, yay! And so I find it all very distressing to make the rounds, because with the Bitcoin people, the strategic reserve, it was like we're Bitcoin maxis, and screw the dollar and alternate system and the whole thing. President of the Holy Global Empire signs the strategic reserve. Trump for president. Trump for president. It's like, okay, what are we praising here? But as far as the trade is concerned, the miners are absolutely ripping and taking off. I find it difficult to go for the ETFs for the gold miners. There's so much alpha that's showing up over here for if you pick the good junior miner, if you pick the good long-term miner, because some of these stocks are just absolutely ripping. Actually, you'll talk about a few of them in the market minute, but gold stocks are interesting. And at the same time, if you just pull up my screen here, 1 second.
There I am again. I mean, I look beautiful and everything, but
if I pull up my screen here, you'll see that the dollar, our boy the dollar, that we always pay attention to, is just absolutely getting trashed there. Right now, Mike talked about it last week. The falling dollar is great for emerging markets, right? You have to understand, like the dollar pressure, the higher the dollar gets, the harder it is for other nations in order to get it, for anyone to get it, but other nations as well. And so it slows down productivity around the world. But when the dollar's fallen, it's easier for them to get, and so those economies do better. So some people are praising this dollar down, and it has this effect of fueling gold's rise higher. Now, I'm not sure what to think about the dollar down, because this is a dollar down that's like faster than I've ever actually seen it. Right? And we broke below.
wait,
this
it went down before. Don't you see it there?
Yeah, but then it bounced.
No, before that, the big spike.
Oh, here. Yes. This is
Up
this
and
is
down.
COVID. Yeah, absolutely.
No, after that, up
Over here.
all the way to the top, the highest point on your chart.
Yeah.
Down from there.
Yeah. But
Sharp pull
this
down.
went
You see
faster. This is
Did
like
it?
this is a waterfall. This is going straight down.
Oh, I see.
And at the 100 level, because what happened over here a couple of months ago, we talked about this idea that let me go to the weekly, that the dollar does this thing where first it bases for a while, then it explodes up, then bases for a while, then explodes up, then bases for a while. And the idea here is that there's a dollar despite what anyone tells you, there's a dollar shortage in the world. There's just not enough dollars, and so you get these step changes, these crises that causes the dollar go up and up higher in prices.
But won't there be? Don't the tariffs mean there will be less dollars circulating? And aren't him getting rid of the trade deficits? Doesn't that also stop the export of dollars?
Yeah, so it makes me wonder, why is the dollar falling?
Anybody
don't
hear
know.
about those drones? Are the drones still flying around? Maybe it has something to do with them.
Well, yields are going up and the dollar's falling, so that means people are selling bonds because dollars are just long, infinite duration bonds with zero interest rates. So they're selling bonds. They're selling the dollar and they're selling bonds. That's not good. That's not good at all. And over here, when we take a look at the low that we had over here in the previous cycle, this is 2017 to 2022. I mentioned in this area because this is around where Trump was president. The low didn't go to it went as low as the high of the global financial crisis. All right, just 1 second here. And then over here, but this low over here that we're falling to is fallen below the high of COVID high and the 2018 high. You know what I mean?
Yeah.
So it's nerve wracking because if it actually falls, like what's going to happen here?
Jerome Powell to the rescue.
Jerome Powell to rescue how? I
We-
mean,
We need to pump out dollars.
no, the dollar's falling. We need to pump out dollars when the dollar's rising.
Oh, right,
Not when
right,
it's
right.
falling.
Right. Okay, well
So-
then, good. Tariffs, cut the trade deficit. Bullish.
It could be that this is what you need in order to, like, let's say this fell to here. Let's say it actually did that. There would be a relief to a bunch of other countries. All our currencies, all us foreigners, our currencies would go up in value versus the dollar. And if they're going to bring back manufacturing to the United States, we'll have a place, a market that we're going to want to spend into, and it could be good down the line. But this 5-year period, 10-year period where this is happening, it could be chaos. I find it funny now the TikToks and reels that I'm seeing of people. Have you seen this? Where people are like, I can buy direct from China.
Yeah. Yeah,
Have you seen
yeah.
this
At a
trend?
fraction of the price. I'm looking into that too. It's like I didn't know the markup was so high.
Well,
I mean, I knew it was high, but it's kind of crazy.
let's say that becomes mainstream. Do you think the Trump administration could be like, well, I guess they found a way around it?
No, I think that's the end of legal trade with China.
And then
I
what
mean,
happened?
from everything that I've seen, I don't see how they don't just close the door on China and be like, it's over. Because China ain't breaking. It doesn't seem like they're bending at all, unless it's just rhetoric. They're like, we're going to go to war to the end. Don't go to war with China or it'll be the end of you. Now, I don't know what's true, but eventually this whole globalization thing is going to have to end. This trade with China. I mean, just close the doors. No more buying your stuff from China. It's it. It's done. Finish. And I could see Trump doing something like
But
that.
that's the United States, right? Other countries,
But yeah, but
they'll increase their buying from China.
look, if you're not with us, then you're against us. Okay, it's George W. Bush all over again. If America goes to war with China, economically or however, then the other countries are going to be like, okay, we're there with you. I mean, look at Ukraine.
I don't know. The Canadian Prime Minister's talking. They're all talking about like war with the United States. Because the tariff stuff is like declaring war on everybody, economic war on everybody.
I get it. Yeah, I mean, if anybody, yeah, I get it.
And
But
Dalio was making the case I think last year or maybe the year before that China is showing all the signs of being the next empire, like economic empire of the world.
how can they do that with their collapsing population?
I don't know. It's like what you're saying. We don't really know what's going on. Like I learned about the collapsing population from what's that guy? Peter, the demographic guy.
Yes. Wow, we haven't listened to him for a
So many
while.
Peters. Yeah, and so he was talking about how he's the one who brought this up. But then he
Zehan.
also said Peter Zehan. But then he was also talking about how the Ukraine war would cause a global famine unlike which we've ever seen before.
Yeah,
False.
exactly. I mean, unless it hasn't happened yet.
Predictions that weren't true. And then China's like, a black box. Like you can't really peer into what's going on.
Yeah,
with their economy.
exactly. I don't see how China can become the reserve currency of the world when
It doesn't need to
they're
become the reserve currency of the world. We're just talking about it being
or
like
the
an economic
dominant
powerhouse.
empire, and it seems so opaque and restricted.
Well, it seems that way to us from the outside.
Well, yeah, everybody's on the outside.
No, the news that we're getting is filtered through our own culture. I have no idea what it's like in China. When I hear about people going to China, come back to go, it's great.
Hmm.
I haven't heard people go like, "Oh, I had to escape China. It was like terrible, and I can't believe what it's like over there." I heard you can't criticize the government. Sound familiar? But flying cars and you get tea delivered to you in the middle of the park, and you buy things that are cheap and things are clean. There's no homeless people. I don't know. I have no idea what's going on. So just for the algorithm, I'm not pro China. I'm pro Holy Global Empire, America all the way. Salute, semper fi, whatever you need to say. But the dollar falling, gold skyrocketing, yields at 4.5% and rising, and stagflation for the next 10 years while America figures out how it wants to make TVs and cars. I don't know.
Yeah, okay, but you haven't said the magical buzzword that we not only need in the algorithm, but we need in this conversation, which is AI. I mean, manufacturing, that's China's whole thing. Manufacturing. Now, the skilled expertise and okay, well, what happens when the robots are building robots who can do these things?
I don't see how that doesn't end in war.
Tom, we're going to war. All right, I don't know.
We're going to war.
I don't know what you're
Strap
talking
on
about.
your vest.
We're definitely due
Get
for
your
a war.
camel gun. Let's go. We're going to war.
That's right. All the World War I and World War II movies are getting quite old. There's only so many more we need more content. That's what we need, Tom. Another world war.
Hey, I
Look,
laugh, but it's like
no, I know.
very likely to
Yeah,
happen. So
dark times.
might as well laugh now and not while I'm in the sands of Tibet. Is Tibet sandy? I don't know.
I don't know.
All the wars I know about are sandy places. So.
I'm trying to age out of being eligible for war. I'm not quite there yet, so just hang on for a few years. Yeah, Tom, this is a bleak episode, I'll tell you that. Okay, I was all jovial when I came in here. My gut was rumbling, but now it's like portents of doom. But there's money to be made, no?
I
mean, what's the trade?
Dollar, long gold, short treasury bonds. I mean, definitely short treasuries. I don't see. I think Kem is totally right. Yields are going to 7% or whatever. So short bonds. I just don't know what it means for crypto. Does crypto start acting like a? Because as they try to pump liquidity into the system, Bitcoin will respond to it, and Bitcoin doesn't need to respond to productivity, right? It's responding to global liquidity. So maybe as they try to save the global, and then global liquidity from outside of the United States can also affect Bitcoin. So that might actually be good. And with the dollar falling, Bitcoin should go up too. So it's like Bitcoin can go up with America falling. So long Bitcoin, long gold, short treasuries.
I don't know.
This really sounds like the anti-empire trade. I'm not sure how I feel about this, but if it adds zeros to my bank account, that's what's going to happen. Peter, before we jump into the market minutes off this depressing stagflation end of the American empire,
exciting, Tom. It's thrilling.
topic.
It's exciting. It's unknown. Look, you don't want to watch a movie where you know everything that's going to happen, right?
Before we jump into the market minutes, I think it's time we have a word from our sponsors.
Ask yourself this. Are you making trading harder than it needs to be? If you're trading manually or still coding just to connect to your broker, yeah, it's time to upgrade. Traders Post lets you automate trades using signals from tools like TradingView or TrendSpider or even your own custom setup. It works with brokers like TradeStation, Tradeovate, Coinbase, and a bunch more. I've been using it myself, and getting started was smooth. The platform's clean, setup's quick, and once it's running, it just works. And when you're ready to scale, more strategies, prop firms, or sharing signals with your community, Traders Post handles it. It's built to grow with you. Start your free trial at traderspost.io. Trade smarter, automate your edge.
As we do every week, starting this week, we will go through the market minutes to find out what's going on outside of all the different things we've been talking about. Some market news that's better suited for a quick roundup. Peter, take it away.
Harmony Gold mining surged 32% during the week, capitalizing on gold's record rally to 3,300 an ounce, driven by economic uncertainty. Anglo Gold Ashanti rose 27.5%, riding the wave of gold's surge as investors flocked to safe haven assets. Fortuna Mining jumped 28.1%, boosted by gold's record highs and strong commodity demand. DRD Gold gained 22.1%, benefiting from the gold price spike amid tariff fears. Summit
Peter, gold is like the new meme coin, right? Gold miners, the new meme coin. Come on, you want your alpha? What is it? 22%, 20%, 27%, 32%? I would love to see those numbers on my portfolio. I just have to be happy with shorting Trump token.
Summit Therapeutics soared 33.9% during the week, driven by biotech sector optimism, though specific catalysts remain unclear.
I never know how to invest in biotech. It always seems like our phase 3 trials are good, and now it soared. I've lost so much money with biotech.
Hewlett-Packard Enterprise shares rose sharply after Elliott Management took a $1.5 billion stake on April 15, aiming to boost shareholder value. Bank of America's stock climbed 4% after reporting better than expected Q1 2025 earnings on April 15th, driven by strong trading revenue. Walmart stock surged 11.5% after reiterating its 3 to 4% sales growth forecast for Q1 on April 14th, signaling retail resilience.
So, when retail consumer staples go up, not generally a good sign. Not generally a good sign. When it's like, hey, people are taking out a bunch of loans and they want to buy low price items at Target, Walmart, whatever. We're really seeing a boom. We've seen people. The line is, we've seen people come here we've never seen before. Yeah, that means middle class is being chopped away.
Dollar store is surging. Yeah, I get it. U.S. consumer sentiment plummeted due to tariff-driven inflation fears weighing on retail and discretionary stocks. Bitcoin held steady around 84,000, dipping slightly to 83.4 on April 18th, showing resilience despite equity market weakness.
I'm expecting Bitcoin to fall to 80,000 any day now. 80,000, and then look, a bounce from over there. But I think 80,000. Put it on your calendars. Mark it. Short it right now. Not financial advice. Do your own research.
The SEC postponed crypto ETF decisions on April 15th, creating uncertainty for Bitcoin and Ethereum investment products. Albertson fell over 7% after a weaker than expected fiscal 2025 profit outlook was announced on April 14th, missing analyst targets. Humana sank 3.5% on April 14th as health insurers lost ground following Medicare payment news. And Microchip Technology tumbled 13.6% on April 17th as chip makers faced tariff-related pressures. That's market minutes.
Peter, I could listen to your dulcet tones all day long. But we're going to have to wrap up. But before we do, I thought it'd be nice just to point out one of my favorite tweets of this week, which comes from Peter Brandt, who had this nice post on Twitter. He states, "What happens at major tops? This was the blow-off top in gold in 1980. This high was not exceeded for 28 years, and it was a fascinating top worth telling about. Back then, I would call orders into the pit, speaking periodically to my pit broker. I was speaking to him on January 21st, 1980, the very minute of the top. The market had been crazy up to that point. At the very high ticks, he said, something weird was happening. Volume completely dried up. There was no bids, no offers, no trading. So what happened? All the pent-up demand and short covering dried up. All the buying had been satisfied. Supply and demand were for a moment in perfect balance, and suddenly supply started to show up. The top was in, limit down, locked for the next 4 days." These are the market moments, Peter, that I live for. These unbelievable oil at -40, GameStop completely up, gold surging and then crashing, dollar who knows where. This is what makes markets so fascinating and so interesting to be in. There's always a story here. There's always something to learn, and that's why we do it. That's why we spend the time to look through the markets, so that we look for opportunities in order to make money or to learn more about the world around us. Peter, today we covered Powell's stagflation warning, the Trump token unlock, gold surge, and falling dollar. Next week, we want to look out for the Fed's next moves and see what happens during earnings seasons over the next couple of weeks. But for now, that's it for us. We'll be back next week because as traders, we don't just watch the news, we trade it. Say goodbye, Peter.
Well, just before I do that, you did a great blueprint flush and buy Bitcoin. If you haven't seen that, definitely go and check that out. It's really cool. If you're wondering what is that, just a play on word, you flush and it buys Bitcoin. So that's what it was. Go and check out Blueprint. It was a really fun episode. And yeah, that's it for me, Tom. Like and subscribe, everybody, and follow us on X, Traders Post on X. Anything else?
No, that'll be it.
All
Go
right.
check out my Trump short.
All right.